Are we headed for market Armageddon? What's going on, guys? Michael here, and today I want to talk about how economics and politics are currently affecting our markets. So let's go ahead and jump right into this. As you can see right here, this is Invesco QQQ Trust, and we had a steep pullback on Friday down to 525.63 from the previous highs of around 537. So what is causing this downtrend? Well, this is what's causing this downtrend. Israel, Iran, and U.S. engagement. As you guys all may have heard recently, Israel attacked Iran, and Iran has made a public statement that they will be retaliating harshly against Israel and the U.S. And we have already seen over 1,000 ballistic missiles launched at Israel. So things are starting to heat up, especially as other surrounding countries are starting to side with Iran. But how is this affecting our markets? As you can see, our markets are starting to sell off. Is this something that we should be worried about? I would say on its own, maybe not too much, but with other factors, such as our bond yields or our negative GDP report, yes, more negative news can mean more bearish sentiment. I would also like to note that when Russia attacked Ukraine, we saw about a good 2 months of bearish sentiment in the markets. And I know that this conflict may not be as big as the Russia-Ukraine war, but it is definitely something to consider when Russia and Ukraine are still at war, when the tension between China and Taiwan is still there, China and India, and now we have Israel, Iran, and somehow the U.S. is involved. And then pair that with our 10, 20, and 30-year all-time highs on the Treasury yields, our negative GDP report. This isn't the best of news for the markets. And let's just take a look at some key points here, right? So are we headed for market Armageddon? So geopolitical flashpoint, Israel, Iran, and U.S. engagement. Escalating strikes between Israel and Iran and the potential for U.S. involvement have injected fresh volatility into global markets. Investors are jittery about supply chain distributions, safe haven flows, and the risk of a broader regional conflict. So Israeli preemptive strike on June 12th. Israel carried out airstrikes on Iranian nuclear and military sites, killing key figures and prompting vows of continued action by Prime Minister Netanyahu. So Iranian retaliation. Iran launched drone and missile counterattacks on Israeli positions, raising fears of escalation into Strait of Hormuz, a choke point for 1/3 of global seaborne oil. Okay, so the market reaction. U.S. equities fell sharply on June 13th. The S&P 500 slid 1.1%, the Dow lost 1.8%, and the Nasdaq dipped 1.3%. West Texas Intermediate crude jumped as much as 14% intraday, settling near $73 a barrel, a level not seen since the Ukraine crisis in 2022. Inflation headwind. With oil up nearly 10% to month to date, the PCE price index for Q1 rose 3.6% annualized, well above the Fed's 2% target, and core inflation has stayed stubbornly elevated at 3.5%. Treasury yields at multi-year highs. Instead of bidding into bonds as a safe haven, investors are selling treasuries, pushing yields to post-crisis highs. Fiscal concerns and stubborn inflation are outweighing the typical flight to quality. Okay. So, economic backdrop. Negative GDP in upcoming reports. The U.S. economy already posted a contraction in Q1 2025, and all eyes are on the next BEA release in late June. A second straight quarterly decline would stoke recession fears. Price pressure. The GDP price index jumped 3.3% in Q1, underscoring that inflation remains well above trend despite slowing growth. Next release. The third estimate for Q1 and preliminary data on corporate profits by industry is due June 26, 2025. Market participants will watch closely for further revisions. Year-to-date performance. Year-to-date, the Nasdaq is modestly positive, plus 0.5%, while the S&P 500 is up 1.6%. Small caps, Russell 2000 remain under pressure, down 5.8% year to date. Okay, so even amid panic mode, structural tailwinds could propel the Nasdaq back to new records. Secular tech growth, resilient consumer spending, and eventual Fed accommodation. Secular themes: AI, cloud computing, and semiconductor demand remain robust. Fed outlook: with inflation showing signs of plateauing, markets price in a first rate cut by year end. Declining real rates would boost equity valuations. Valuation buffer: despite recent gains, the Nasdaq trades at approximately 22 times forward earnings, below its 5-year average of 24 times, offerings a cushion against risk of multiple compression. Liquidity flows: institutional surveys show cash levels near 10-year highs, indicating dry powder that could rotate into equities on any dip. Okay, so that was a mouthful to read. Let's go ahead and hop back onto the charts and take a look at some of the technicals. Okay, as you can see, we are very close to our previous all-time highs, and we are in a very strong resistance zone. On our one-day time frame, you can see the RSI is around 57. So we are approaching those overbought levels, but we are not quite overbought just yet. As well as if you see here on our Bollinger Bands here, our top Bollinger Band, our middle, and our bottom, we are very close to approaching that middle Bollinger Band, so we could see this dip get bought up from that reserve of cash flow that investors are holding on to right now. I do want to highlight some of the positions that I am currently in. This isn't investment advice. This is just the things that I've been doing. So right now I am currently invested in Pony AI, Big Bear AI. So those are two AI companies right there. Sophie. And I closed a position on what was that? What was I trading? Oh, QUBT. I forgot. I took that position. I actually made a decent bit of money on that one, and I'm happy I was able to get out when it was skyrocketing and it had a decently sized sell-off. So I was happy to get out of that position. But yeah, that was my other position that I was in. I've been making money in these markets. I've been doing really well, especially this last month. I think we are at like 5,200 realized for the P&L this month, which is super nice. I'm very happy with that. I've been trading all kinds of different things such as Circle, ASTS. I made a video on ASTS. That has been exploding. It was like $22 like 3 weeks ago, and it just hit like a high of like $41 just this last Friday. So if you haven't already, watch that video for sure. It'll definitely give you a little bit more confidence into the company ASTS, because it is definitely one to keep a lookout for. I'm actually going to pull it up right now on the chart right here. Look at this, 41.13. This thing is a beast. And I took trades all the way through here. I did close my positions. I actually played both ways. I made money going long, and I did shorts as well. So that was nice. But yes, long-term bullish on this stock. Great stock. Look at this. Our last month realized P&L is $5,422. So a little bit more than I thought it was. But yeah, this has been fantastic. And I've taken losses too. I took a couple losses on SQQQ. I took a loss on Chime earlier when they IPO'd, $277, as well as $105 on Coinbase. So nothing too crazy here, but overall the last 1 month been doing very solid. Very happy with my gains. And yeah, I'm just excited to see how the rest of these months play out this year, considering all this news, economics, politics, etc. But yeah, let's go back to the charts. I will say that despite all this negative news, I'm still very bullish on the market. Honestly, I really am. I do think that we do have a strong case to still go and hit those all-time highs and actually keep pushing past those. However, I do want to recognize the risk and reduce some of my positions and just be a little bit safer, right? Keep a little bit more cash on hand. For me, I'm trying to get to a a 60-40 split where I am 60% invested and 40% cash reserve, just in case we don't see those all-time highs, just in case we don't keep pushing, and we start to see a retracement and a downtrend, bearish, all these different things. If we start to see that, it'd be nice to have 40% cash on hand to be able to take advantage of those dips without being in full panic mode. So that's kind of like my outlook on this whole, market situation. This does present a strong case for bullish momentum, a continuing uptrend. So I just made this video. I just want to talk about some of the key things going on in our markets. Just want to highlight some of those things so that you can understand the risk as well as the rewards. Understand that, nobody really knows the market's going to go up, down, or in freaking circles. It's anybody's guess at this point. But the best thing we can do is stay risk managed, follow our rules, follow our plan, and stick to our goals. So thank you guys for watching this video. If you guys found this video helpful or insightful, please like, comment, and subscribe. I greatly appreciate it. I will be dropping videos here and then. But thanks again for watching, guys. Peace.